All right, so thank you everyone for joining. This is going to be a session on funding for startups, and we have a great panelist for you to help discuss, certain challenges that have been facing in the UAE as well as other parts in this region. And myself, I am Shamim Chowdhury. I'm one of the co-directors of FI. And with me today, I have the regional director of FI, which is Samir Satur. Would you like to give yourself a quick wave? And we also have three individuals that would, really know about a lot in terms of the funding space. I would like to, first of all, I would like to introduce Victoria. She's a very interesting character. I've met her previously through in the corporate world for the Abu Dhabi entity of Investment Authority here. And through that time, we've both seen challenges of raising capital for startups. And now she has her own startup, Mindtails. She is a founder, and she's also a board member for one of the CFA societies for the Emirates. And it's a pleasure to meet you. So obviously I've met you before, but it's a pleasure to have you on board. So thank you very much, Victoria. And also, Samir, would you like to introduce the other two panelists?
Sure. So thank you very much, Shamim, for the quick intro. Welcome, Victoria, and welcome, Basil and Chetan, to this startup funding event. The objective of this event is to kind of get the early stage founders know how funding works, what are the different instruments. A quick introduction about myself, and we'll quickly go to Basil and Chetan. I've been in the region for 18 years. Worked in the startup world for about 10 years now, both into angel investing as well as running an accelerator. Founder Institute started about a year ago. We're very glad to have graduated about 12 across the region, and we're aiming for more. And these are some of our recruiting events we use to kind of create awareness about FI, as well as kind of bring thought leaders to share their experiences. A quick introduction about Basil. So Basil Mofta, general partner at Global Ventures. Global Ventures is a Dubai-based growth stage venture capital firm, and they have investing a lot in startups in health, food, and other verticals. Previous to Global Ventures, Basil was president of intellectual and property science division at Thomson Reuters, where he's kind of worked very interesting position where he's converted content and technology to a microservices architecture and then made that entity ready for a buyout. So with a large experience in intellectual property science, creating a fund, he currently heads Global Ventures, and I'll leave it to Basil to kind of have a quick couple of words about his experience of the region, and then we'll move on to Chetan. Welcome, Basil.
Thanks, Samir, and nice to meet you, Chetan, Victoria, and Shamim. It's great to be with all of you. Yeah, it's nice to be here. No, Global Venture, you put it together really well. I think, I started in venture in the States in 1997, so it tells you a little bit about how old I am, and did that for a few years. Invested at the time in companies like Yahoo and Netscape and VeriSign and some exciting things like that, which we take for granted today, but those were startups one day as well. And then worked in Europe, and then worked in all over the world basically. I came back to the region 5 years ago, kind of to focus on what's happening with the changes in venture, really, and in technology in the region. I think there's just so much potential. We started with a fund in fintech that was really exciting, and we did a lot of fintech deals. I think we're like 12 companies in our portfolio of fintech, so it makes us one of the larger fintech investors in the region. Paymob and Tabby and Thunder and Now Pay and Lean and Tarabut and some of those guys. So we're quite prolific on the fintech side. We've done a lot of software and SaaS and stuff like that, but lately we're focusing on what we think COVID-19 provides us opportunity, even though it's a pandemic and obviously people are being impacted around the world. And those are things like healthcare and health technologies and digital health, education and online education. We see a lot about future of work and how we're all going to be working just like today. We're all meeting wonderful people around the world and feel connected to them through technology. Although I have to say, being back in Egypt this last few weeks and meeting entrepreneurs face to face is exciting as well. Let's put it that way. But nonetheless, future of work and agri-tech will be the last sector that we look at. But health tech is our big bulk. I have a bit of a background in the intellectual property and science, as you mentioned, and it's exciting. It's a $100 million fund. We've raised most of it. It's just kind of in the closing stages. We've already started to deploy. We have 12 companies in the portfolio. I mean, we're moving fast. The industry is moving fast. We're excited to work with entrepreneurs in the region.
Nice to have you, Basil. And with that having said, Chetan become a quick friend during COVID, and we exchanged some good memories since then. So a quick background about Chetan. Chetan has multiple roles. This region is very strong in supply chain logistics. So he is a chief strategy and investment officer for Transworld Group of companies, but also his recent role is very exciting. And I'll let him tell about that. He's the CEO of a single family office called Wami Capital. And Chetan, I like to, Chetan brings a lot of experience in finance, strategy, operations, not only in supply chain and logistics, but across various verticals. And literally he's also angel invested in about more than 24 companies. And from Wami Capital side, they're looking to kind of look at interesting deals across India, US, and Israel. These are 3 hotspots for them. They're considering investment. Chetan, a quick introduction about yourself, and then we'll move on to Victoria as well. Thank you.
Thanks, Samir, and thanks for having me, and good to share the panel with all the other panelists. Yeah, so I think as Samir kind of put it, currently I'm heading Wami Capital, which is a single family office of the Transworld Group. So at Wami, we focus on investments globally and different asset classes. Personally, I'm trying to build a venture portfolio for the family. So while we work with funds selectively, but the last couple of years, our focus has been to go direct and invest in startups globally. Yeah, I mean, we've made investments across different stages, right from seed, early stage, Series A, and also a few growth and pre-IPO kind of opportunities. So some of the investments have been in eToro, the social trading platform, SpaceX, and of course a few other exciting startups coming out of Israel, especially focusing on tech and blockchain. I think going forward, I'm very keen to look at the region and invest in the region. We've not really had any investment so far in the region. So this year, our focus is to see, how we can, work with startups in the region and use our kind of experience and network to really help them grow. So look forward to, this event and sharing my thoughts. Thank you.
Brilliant. So thank you, Chetan, for your insight and experience. And Victoria, you moved from a corporate life into investments to being an entrepreneur at Mindtails, and 2 interesting things. What made you transition to an entrepreneur? And right now, when Mindtails are growing, what are some of the top 3 challenges you're facing? And maybe it's a good opportunity to share with the audience today who are early stage founders to kind of bring out those challenges. And obviously then we can move on to the investors to kind of see what are the best ways to address these challenges. Over to you.
Yeah. Thanks, Samer. And really, I appreciate being here on the panel and sharing my story with all of you. Yeah, so as you mentioned, so previously I was working in finance for over 10 years. And at the same time, I always had entrepreneurial bug. So this is actually my 3rd venture. and other ones were in UK and one here as well. And I just decided, like, working in Abu Dhabi Investment Authority, it was a great job, like lots of interesting people around, but actually I wanted to create a bigger impact, and I was feeling like responsibility that I can actually do that. So that's why I decided to focus it on full time. And the idea was a couple of years ago. So I was looking at mental health in overall, and seeing like there is in this region lacking a support system for a lot of people and my colleagues as well. And I decided to focus on that. And now we already, like, we established company a year ago. We have 7 people working here in Abu Dhabi, and we have separate offices like tech team outside. So being startup founder here in the region, like, I can see like there are different, overall, there are challenges in any parts of the world if you creating your own startup. So of course it's a bit different. In particular in this region, I'm thinking the culture is a bit different. So if you come from Europe and you come here, you need to spend a bit more time and understanding like how you need to create different relationships and companies working or different stakeholders in a different pace. So I think you should be patient. Another challenge, like, and I think we will discuss later, I think now, like coming here 6 years ago, I've seen how the ecosystem has changed, and it's really great. And that's why I decided to stay here, because now the government is really supporting startups, lots of other initiatives, so that is good. But at the same time, getting funding, it requires a bit more time. So usually maybe in Europe, it can take, like, depending on the stage, like pre-seed, maybe 3 months, but here it will take longer. So from my experience, for like initially for angel round, it took us 6 months. Now we're fundraising seed round as well. It's already like a 5th month we're doing that. And you just need to maybe plan a bit more when you think if you need funding. So you just get like longer timeline.
So I think the perfect correlation because you know, global ventures, WAMI Capital, global ventures invest at seed and above stages because they're growth stage. Some of the areas when you evaluate entrepreneurs, what are some of the basic requirements? Do they need to have a team? Do they need to have traction? What are your experiences? You're you know, investing across founders across the region, across the MENA region, and even global. So what are some of the characteristics you've seen?
Yeah, there are many parts to that question, and so let me try to kind of break it down a little bit. Every VC will tell you we look at team, and we look at market, and we look at, you know, the fundamentals, etc. For me, raising money is a little bit more nuanced than just checking some boxes, if you like, right? The question that you have to fundamentally think about as a founder and as an investor is, have you proven at the stage you're at, whatever that means, and I'll explain in a second, have you proven your experiment? Because we're running experiments here, right? We're back to, you know, science class, if that makes sense. If you can prove that customers are interested in, you know, X, because you did customer surveys and you've talked to X, Y, and Z, and you've shown, then you are worthy of, let's say, some seed money to try to build X and go and sell that. If you sell to 100 customers that are not your family and friends, or 5 people that you know at a corporate who you sell the product to, and so on, and they're willing to pay for it, or they're willing to take it for free and try it, but you can show usage of the product is high because it's something that they need to do their work, or if it's a consumer product that people are repeating, then you have, you know, worthy of, let's say, pre-series A or whatever you want to call it, money, right? If you have built the engine of a small team and a way to recurringly attract customers and to you know, profitably grow that revenue of that business, then you are a Series A company, and so on. Obviously, these definitions are blurred. Obviously, there are lots of nuances. I'm oversimplifying a complicated thing, but I like the idea that that we should think about entrepreneurship through this. Have you proven your stage that you're ready to move on to the next stage? Can you show the evidence, right? Rather than, I'm a really nice guy, you should love me, I work hard, you really are, you know, I'm really, because it's, I love you too, right? I mean, we all want to have personal relationships in this very difficult business of building companies, but ultimately we are building assets or companies, if you like, and we need them to be successful.
Yeah, while it comes to early stages, the most difficulty is the founders taking longer time. So as you said, Victoria, it takes a lot of time for pre-seed. Like if you're in the US, you know, they say over a coffee, 25, 50K checks get signed, while our region, culture, and obviously a lot of investment is coming in, but the right investors are looking at the right deals and the right set of customer segments founders are addressing. And again, from a fund perspective, obviously the fund has to deliver certain returns. So they are on a different side note in terms of what kind of deals to invest in. While I want to come back to Chetan, you know, your mandates as a single family office are not as pressurized as a venture fund. So what kind of characteristics have you seen when you invest in early stage, seed stage startups? And can you also share some of your experiences of type of founders you're considering to bring into your portfolio? Thank you.
Yeah, so I think, you know, the first criteria is, as Basil also mentioned, is about, you know, have you really proven, you know, what you're trying to do, and where are you in your experiment? But I think along with that, what we also want to see is, you know, the clarity of thought which, you know, the founder has, right? In terms of one, okay, you know, what is the overall vision with which, you know, someone is starting out to kind of sacrifice their career and, you know, trying to build something from scratch. And, you know, how do they see that kind of, you know, developing or enlarging in the years to come? But then also be very clear of, okay, what are the steps that they are likely to take or they're going to take in that journey? And at what stage really they require capital? Because, you know, that articulation is very critical. Along with that, I think what at least, you know, I like to see is whether the founder is also, you know, a financially savvy, right? Has financial acumen and is just not a marketing, you know, person, right? Because, you know, there's now so much focus on, you know, unit economics and, you know, all of that. But at the same time, you know, growth is also important. So how a founder is balancing all these things is something very important to kind of, you know, look at, and at least, you know, talk to him, you know, through that process, or talk to her through that process. I think, you know, at the early stage, it is more about, you know, how founder is able to articulate his vision. That kind of determines, you know, because I think as far as market is concerned, you know, obviously to a large extent, if someone is, you know, kind of is spending his time and energy on a particular idea, then obviously there is a market which he has evaluated. And we've seen that sometimes, you know, the market really change, like what happened post COVID, because suddenly, you know, a new thesis emerges, and, you know, someone, a product or a service which was good to have becomes a must have, right, in a post COVID world. So I think clear articulation of their strategy, their thought process, their idea, and you know, giving that conviction to investors about, you know, how they are trying to go about and the steps to it. And not really, you know, approach investors just for the purposes of funding, but really try to onboard the investor into their vision and their plan for how they want to go about building a large business. It's not about building a successful startup. It is about building a strong business.
I think the very, very interesting articulation is having your investors really get into a very close collaboration, partnership, and help you realize your vision. While you know, the always common debate is smart money versus dumb money, and founders don't realize they just want to raise funding, right? They come up with a heap of product pre-built that they think that it's market ready, but when it actually gets deployed into the market, it just falls off. So one of the important realization what investors look like yourselves look like are, can this be deployed and can it achieve repeatable success is one metric. Victoria, you kind of have also looked at different venture funds and investment funds, both here as well as globally. What are the unique characteristics and in terms of approach you kind of found which you would like to share? Like regional funds versus global funds, any kind of disparity, clarity, or anything you would like to share as your experience?
Yeah, so firstly, I think there is different type of capital. So here you have venture capital, you have family offices as well, you have angel community, quite big, like here, Abu Dhabi and Dubai. Outside, I think mentality as well is a bit different. So I think that's why, like in US, it's a bit maybe easier, like as you said, to receive checks, angel checks around over the coffee, because the startup ecosystem started a while ago. And those angels, they're already repeatable entrepreneurs. And here we already see evidence like from Kareem or Souk example. So we just like the new wave of entrepreneurs who were part of those organizations, they got an exit and now they start building those other companies or investing in other startups. So I think down the line, we will have like more people who understand startup environment that are maybe less risk averse than traditional venture capital. And here we just recently, I think just a couple of years ago, we started seeing more venture capital forming here. And people who heading venture capital, there are just maybe a couple of ex-entrepreneurs, and maybe they can have different mentality evaluating other ideas. So I think that is the big difference, how you need to approach. And at the same time, like as a startup founder, I think, and as you said, like being smart money and dumb money. So there is a lot of capital, but then you just need to think like how much capital do you need to raise? Like ideally, maybe you don't need to raise at all. So, and as Basil said, like the key idea is to test your product, test your idea, even without funding and seeing whether it works or it doesn't work. And now there are like, I think, different ways how you can do it. And then decide what kind of money you want. And there are, even before going to venture capital, there are a lot of accelerators, programs, grants. So I think a lot of entrepreneurs should explore this as well.
I just want to add something, actually, as someone who's been connected to Victoria's, story, as well as the Mindtail story, regardless of the obstacles that she is facing, she is constantly raising her game. And that's, I think, the key thing here. With the F5 program, in that 14 weeks, with the mentorship support, we're getting you to constantly raise your game to the point where it doesn't matter what obstacles you're facing, you are getting to that point where you're going to get investment, regardless of whatever happens. And I think that's really important. And I have to appreciate what Victoria has been doing for the past year or so, is that she's been constantly raising her game, changing the stakes and experimenting, as Basil has mentioned. So thank you.
The pivoting and Basil, this region, because it does not have the technical talent, we always kind of complain about this, while in markets like Egypt, Jordan, you find a whole bunch of technical talent available. From an investor perspective, do you look at how many pivots has a startup done, or do you allow them to take your money, take your capital, and then pivot? What is the mindset there from an investor perspective?
Trick question. That's what that question is. First of all, let me just say to the audience, I apologize. I had told Shamim and Samir that kind of around 1:30, I'm going to go off camera because I'll move to my mobile phone, but I need to get to the airport to get back to Dubai. And so I'm going to be on the move a little bit. So I apologize to everybody, but I was glad that we got some time at the beginning. I think the question is a trick question because let's put it this way. What is an entrepreneur? An entrepreneur is someone who is good at solving problems, making experiments to test their theories and get them through. And so the problem in one country could be lack of engineering talent and you need to outsource to another country. The problem in another market like Egypt is, the cost of transactions is very low and the value, so you have to create a lot of volume to create the same amount of revenue, right? In a place like India, my guess is things like distribution and the size of the country become a challenge to solve, right? So when somebody in Dubai is saying, oh my God, distribution is so difficult, I'm kind of laughing to myself because I'm thinking about the entrepreneur in Pakistan who's doing the same thing across multiple cities with really no infrastructure. I get the challenge in Dubai is it's expensive maybe, or you have to work with partners that can be, they can miss the SLA from 97% to 95%, but try to do the same thing in Pakistan or India. And it's kind of like, you don't know whether the package is going to make it or not, right? You just hope to God it makes it and they can find the address because there's no addresses. So my point to you is entrepreneurs is a person who solves problems. I'm looking for an entrepreneur who will, take my money and grow it by, ideally convincing me or proving to me that there's something there and there's an opportunity. I expect fully that they will pivot along the way. And I expect fully they will adapt and they will find other opportunities. We have businesses that have that started off as health tech that are now turning into fintechs because they've realized that, medical costs are so expensive and consumers are, in dire need of financing. So they're not just providing connections to doctors and hospitals and surgeries, but now they're trying to help the consumer finance that operation because it's expensive for them to do, especially if you're uninsured, obviously. And so you see what I'm saying, right? Everybody, you adapt to where the value is. That I expect. But what I think is more important is to know when to stop something. You know what I mean? Like I think an entrepreneur who just keeps going and doesn't realize this isn't working is equally bad as someone who takes your money and doesn't do anything with it, in my mind. Right?
Yeah, and there are with the I call it like a lifestyle disease. We've also seen some entrepreneurs in my career in the last 10 years who kind of taken capital or raised capital and kind of utilize it for lifestyle. So we're kind of a little bit has to be balanced. If it's a committed entrepreneur, obviously you will build something unique. And obviously when a venture capitalist or anybody who's investing into you, they're not only expecting a higher return, but also they're also looking at impact. And this is one of the things which is growing. A lot of investors are doing conscious investing when it comes to investing in new age businesses. Chetan, from your experience, have you looked at businesses from the beginning who are turning their sides to impact, maybe more than profit? Have you kind of come across those kind of companies as well? And then you took a decision to invest because the impact was huge, and then they could move to the next level.
Yeah, so I mean, ESG as a lens is definitely important to look at. And in fact, we are looking at a few impact funds, to invest. So that is there. And I think currently we are evaluating a few startups where, we also ask them questions about, how on what parameters they are creating impact. So that's something which we kind of look at as part of our diligence. But at the same time, I think, when you focus on innovation, I think that itself, from a future perspective is, creates that, huge impact. Because I think over last 2 years, we've invested in, companies like, in the food space or clean tech space, or even health tech, where really they are creating a difference in terms of how they're going to really change in the way consumers will consume different things, or make their lifestyle much more better, or provide them much more access to good healthcare, or good way of using the day-to-day services. So I think that's something which definitely is critical going forward, because I think a lot of the large funds are also have this impact kind of lens, and they look at it very closely. So I think as a startup grows and attracts more capital from large funds, this becomes a very important parameter on which they should really focus on from early stage.
And Victoria, you being an entrepreneur, and mental health being one of the pressing problems, not only in the region, but globally, a lot of investment coming in. Like, what are some of the parameters from a health well-being perspective that investors have asked you, saying these are some of the parameters we would like to consider before we put in our the first tranche of capital, so that then you can kind of scale your operation?
I think the parameters are the same as for any other startup. It's just maybe mental health is a new thing to this region, and some investors might be biased or having don't want to talk about social stigma related to it. But we've seen after the COVID, I think more investors are more open to that. And then we've seen how the market in US changed. So just this year, we have 6 unicorns in US who are from mental health space. And when the investors here see that, so then they can draw the parallel, the same as with Uber example. So when the Uber started, and then Kareem came here 5-6 years ago. So the same for mental health, it's just a matter of the time.
Excellent. Shamim, just a quick roundup that we're on time. And are there any questions in the chat box you'd like to pick it up, Shamim?
So we have a couple of open questions. I see Victoria's been very active. So thank you very much for that. So we have a question from Rahul. What exactly is the investor's mentality while investing in the startup? Are they looking for their return on investment instantly after a certain period of time, or do they follow a growth mentality, wanting to see the company grow? So it's an interesting question.
You mind if I take it, because I'm about to go off camera and start moving. So I think I'll take this one. Is that okay, Victoria, Shaitan? I'm jumping in here over. You guys feel free to add. That's like asking a question. That question reminds me of the thing, how long is a piece of string, right? So, and the answer is, well, it depends. And so it depends on many factors. When you're young and you're kind of going into university, usually you don't know what you want to study. And most people end up studying something and then changing their minds, if you want. But as you get older, you start to say, no, I want to be a doctor or a lawyer, or I want to do a business administration, or become an artist or a singer. You kind of have to say to yourself, what is it that you want from an investor, rather than what are investors thinking? And then say, which investor would suit my investment and what I'm doing best. Okay. So investors come in all sorts of flavors. We're all very different. What I love about it is that we're usually more friends than we are competitors. We work together, we talk with each other, just like founders do. And we all know about the founders' WhatsApp groups, by the way. If you don't think we don't know about them, then you're kidding yourself. And we all know how you guys chat about us. But the bottom line is we chat as well, and we have our own little groups and we talk. But more importantly, we're very different, right? Some people say, hey, I'm so excited about health tech, and others about fintech. Some people are excited about early stage, and some people are later. Some are looking for things that are going to make them 10x, and some are looking for things that are going to be steady growth in a big market that can, over 5 or 10 years, just kind of continuously go. Some people are willing to try disruptive ideas that may never work with a company that's not even regulated in a sector that's regulated. And others may be very cautious and like the regulation element, if you want, okay? And make sure that everything is kind of boxed or ticked, especially in a region where we're so regulated by so many different entities, in the countries that we operate in. So I'm answering the question in a long-winded way to say, we think about a lot of things. I can tell you what Global Ventures cares about, right? And I can tell you what my thesis is, but to ask the question of what do investors in general think about, we're all very different. And I think that's what makes it exciting. Do we need more investors? Absolutely. Do we need more diversity in the way the investors think? Even more than I think there is. The region is still very young on that. And that's part of the challenge. Some ideas won't work as well here because the investor appetites are not there yet for those types of investments.
Brilliant. And Basil, whenever you want to go off camera, feel free to do so, so that you can start, getting off to the airport. But yeah, Victoria, thanks for taking that off, and Basil, and Victoria, over to you. So go ahead and kind of take that up as well.
In terms of investors' mentality.
Yes.
Yeah, so I just want to echo Basil's words. Like every investor is a bit different, and it depends on their thesis as well, because startups are very different. So I would suggest for entrepreneurs, when they look at the venture capital, so just not email the same email to all the venture capitalists. So you need to look at what kind of profile they are investing, what are their verticals, and then reach out. And the best would be reach out not to asking money, but it's like saying when you need money, ask for advice. When you need advice, ask for money. So that's, yeah, and to build those relationships, because it's a small community, and then, yeah, just meet them. And it's the same, like not only from the investors, but from your point of view, because it is like a marriage. If like investor invest, it's like you will be talking to investor for the next 5 to 7 years. So then as a founder, you need to make sure you want to get into this relationship.
Fantastic. I think we got another question coming through from Oleg. I think he has a lot of questions regarding a company, I guess, based in Eastern Europe, but getting access into the region, which is a very interesting question. I think personally, there's the example of Telegram. They were initially based outside of Dubai, and then entered into Dubai and expanded hugely. How about you, Chetan? Do you have any experience in this area? I think.
In fact, we being in the region, we've not invested in the region, right? So we've invested outside of the region. So I think it does not matter at all, whether I think the important thing is to kind of also link to Rahul's earlier question, is that you need to be very clear about what kind of investors you're looking at, right? So to start with, you will have maybe friends and family. Now they may have a very different expectation, and then you have maybe angel investors, and who may be a collection of small checks who are coming in and then pooling capital. They may have a very different expectation. Then you could have a family office, and then you have a VC fund, which both have a very different expectation. But I think it's very important to ensure that what kind of investors really you want, because you want someone to add value also as part of your story and as part of your growth. And therefore it's very critical that you kind of look at investors who are also kind of helping you, and act as a sounding board if you want to have an informal chat, and just maybe meet over a cup of coffee and just say, okay, these are things that maybe I am a little struggling with, if you can share your thoughts. So maybe it's important to look at your investors as also sounding boards, as friends, as maybe Basil said, and really identify that, okay, who are the ones who you really want to have on the cap table. Because as Samir also said, you may have a lot of investors putting in money, but then is that really smart money? Is that something which is adding value to you? Because it's very important that you get investors, who are constantly, you can reach out to, you can call them, and they can give a lot of inputs to you. As far as Oleg's question, yes, I think you could definitely approach any investor, because investors in the region are also investing globally. So I'm sure that you can reach out to investors in the region or any part of the world for your idea.
Fantastic. All right. Samir, do you have any preferences on the next question we want to cover?
No, go ahead. If you have questions, we'll take more questions. I can see the Q&A box filled.
Yes, absolutely.
Yeah. So maybe I kind of just want to take one question for both Victoria and let Basil settle down. For early stage, what is most important is kind of making the right decision of investors, co-founders, early employees, all of the above, right? And now, because we are talking today, the topic of the discussion is around funding. And Victoria, for you per se, have you also seen a lot of rejections first before actually getting your first investment? How did you deal with your rejection? And second of all, from an investor perspective, Chetan, what happens when you've rejected a founder? For example, you're not interested for the next round of due diligence with a specific founder. So Victoria, from a founder mindset, and then Chetan from an investor mindset. If you can go first, Victoria.
Yeah, thanks, Amr. So this is a good question. And I think for entrepreneurs, like, you need to think investing is a long haul game. And then when you need to find the investors, so then you just look what's suitable for you. And at the same time, it's like dating. You need to date maybe a lot of people until you find the right one. And as you said, like with some in investors, it might be not just the right timing. So I still would encourage everyone to talk to as many people as you can to start with, because it takes time to build the relationship, to know more about each other. And so, for example, like some people maybe in angel round, they didn't invest, it was too early, and now they're part of like a seed round. So I think I wouldn't discourage, like if they say no, it might be just no at that point in time. And for some others, it might say no, but that's fine. So then you can, so I would recommend as well, it's better to have clear no than maybe, because then you're just like in this limbo situation.
Sure. And have you, like, if they say no, I don't want to be biased because you're already in the mental health space, so you can balance it well. A no is taken as a no. Most of the founders in our region do not take a no for a no. So, like, how do you think they should balance a no for a no?
So as I said, no, it can be like to understand why no. Is it no because they don't invest in that vertical at all? So maybe it's no. No because it's different timing. So then you just still keep talking with investor and providing updates and seeing maybe in the future they will invest. But still there are a lot of, I think, you just need to continue. There are a lot of different types of investment available. If venture capital is not available, angel community, accelerators as well. And I see like another question was about, like, now government is allocating budget for startups. So there are a few accelerator programs starting here. So maybe you should start with those first. So the thing, if you just say no, so you just need to continue and find other ways.
Sure. And Chetan, from your perspective, when you say no to a founder, that founder goes on to become success, how does it reflect on your decision making, and what are some of the things you consider when you make future decisions?
Yeah, I think since we look at startups globally, we get many pitches every week from various founders or from various network sources. So it's not, kind of easy to also go through, all the deals and, kind of quickly respond to everyone. But having said that, there have been many occasions where, we would have looked at an idea and really spoke to the founder and found it interesting, but then we found it maybe it's a little too early, and we wanted to see some more traction on it. When we've said no, what I've experienced is that there are two sets of founders, right? One is someone who you say no, and then he or she stops communicating, while there is another set of founders who kind of keeps coming back with regular updates, or you are made part of their network list, and they keep writing to you either on LinkedIn, or you keep getting mails about their quarterly updates. And there are so many who kind of as Victoria said, trying to build a relationship. And I think that is something which is which all founders should do, is not really take no as a no, because you never know that sometimes an investor could be looking at maybe a next round, or trying to just see the traction, or they may have their own reasons not to participate. So I think it's important that investor relationship is something which is really focused by the founders, and proactive updates are kind of shared, because that will really help them going forward also in the eyes of the investor community.
Brilliant. I don't know, Basil, whether you have some quick tips to share before you head into the plane.
I'm not going to invest in an entrepreneur who just sent me an email, say, hi, my name is so-and-so, please invest in me. That's not how this works. I need to know who you are. I need to see commitment and consistency. We'll track companies for 3, 6, 9, 12 months. We have an entire tracking system of following up. And we would love to see the follow-up and the consistency. We love things that are people introduced to us from people we trust. Our founders are people we trust. If you can get one of our founders to introduce you, it's like 10 points more, right? Because they won't introduce something that they don't themselves believe in. And our founders are who we believe in. So that's great. Our LPs, our investors in our fund, they're another source that we trust, right? Our advisors. Nothing kills me more than somebody sending me an email that says, hi, I'm so-and-so. I built a gaming platform and I'm going to be $1 billion company. You should invest in me. And I'm like, have you even bothered to read our website? Do you even know what we do? We don't do gaming. We're not in that space. That's not us. What are you like? How random is that? My favorite is the ones where people copy multiple investors at the same time. And my really favorite ones are the ones where they misspell your name, the name of the firm, or things. That's even better. That's like, okay, great. I'm never going to invest in that person. Bottom line, Victoria and Chetan have said it. It's consistency. When 20-30% of the companies that we say no to, it's because we don't have the time to look at it now. We're literally like, no, not now. Stay in touch, but we're busy with other things. We will come around. We'll talk later. And you know what? If somebody is successful and does well, I think it's great for the ecosystem. I think we all win when people do well. When success is the success of a startup is success for everybody in my mind. And I never regret the ones I never say, oh, I wish I had done it, etc., etc. What I do regret is if our team doesn't stay in touch with companies and with founders. We're really prolific about it. And the flip side is I regret when we've done a deal too quickly and we didn't get to know the entrepreneur and build that relationship that gets you through the good and the bad. Those things I regret, especially when things turn sour. You want to have a good relationship. I'd love an entrepreneur who fails and we turn around and back him the second time because we did it together, stayed in touch all the way through, thick and thin.
I think one of the, Basil, and feel free to drop off if you want to, Basil. I would like to thank you. Crux of the matter is investors, entrepreneurs, everyone is a human. So building a relationship is key, very, very important. Continuing persistently to pursue that relationship is far more important. So many founders also come our way. They do not complete our program successfully. They drop off in between. We give them an opportunity to re-enroll. They re-enroll, but are not consistent. And this is one criteria that we really kind of take head on. If you're not consistent, you are not our type, So be very consistent not only when you're raising money, but when you're building something, when you're creating something with your customers, with your target market. Be very, very consistent with all the stakeholders around your company. Let's push to questions. I think we have some time remaining, about 10 minutes, and let's I'd like Shamim to take all the questions and kind of allocate it to the panelists, please. Shamim.
I've got about 5 minutes, by the way, so I'll take. Just to let you know, I'm going to drop off in about 5.
Okay.
Okay. I love your commitment, Basil. Thank you very much. If you can answer this one question, which is basically, if an entrepreneur is of young age, for example, like a 21-year-old, how do they get investors on board? Because they have no track record, they have no
Sure.
minimal experience.
I love that one. It's a really interesting one. And I think this is just a personal opinion. I'm not even sure I'm speaking on behalf of Global or behalf of anybody for that matter. It's my personal view. I sit on the investment committee of Dubai Angel Investors, and we had so far 2 pitches, one about a year ago and one about a month ago, from actually students in school. They were 15 and 16 and 17 and 18, I think. And I guess they got the entrepreneurial bug too. I don't think I think some entrepreneurs are just born that way. And these, I don't want to call them kids because they were so impressive. These young adults, let's put it that way, were ready to take on the challenge. And I think what they did, which is really amazing, is turn their kind of, their age into their advantage. They started to talk about what their generation cares about and what matters to them, what they see as the challenge and opportunity. One was about summarizing books, if you like, and notes for studies, and how students, in this crazy world we live in today, have very little time to do activities and sports. To be a great student, you have to do so many things, and nobody has time to read, the damn full text science book. And how they were going to kind of Instagram, if you want, or Snapchat, science books in a clever way, in a format that appeals to their age. I guess my answer is, of course, you need advisors, and I would suggest that they have mentors. Every entrepreneur, young or old, in my mind, should have people around them to give them the 360 view and feedback necessary to help them on their journey. I think for young entrepreneurs, they have an advantage. They've got the longest number of years ahead of them to prove their experiment and be successful at it. And in my way, I see that as an advantage, not a disadvantage.
I think now is probably a good time to mention that FI has about 22,000 mentors globally, just so you know. So thank you very much, Basil, for that answer. Chetan, I have a question for you. So in the Western culture, there are some founders have experienced, I guess, being disadvantaged, being a female founder or something of that sort. Do you see that happening in this region as well? Do you feel like there's a bias going on?
Frankly, we've not really invested so far in the region, so I may not really have, those insights. But I think it should not really matter because, when we look at startups, it's more about the idea, the clarity of thought which the founder, comes up with, as I mentioned, and really the purpose and the intention behind, why the person is really, wants to implement that idea. So it should not really matter, and if it's happening, that's pretty unfortunate if that is so. But that bias should not be there. In fact, one of my very first investments was in an Indian company which is backed by a woman entrepreneur. So that's not really the basis at all.
Thank you very much. How about Victoria? I think you might have something to say about this.
Yeah, so if we just looked at the numbers, unfortunately, only 2% of venture funding goes to female founders. But I wouldn't discourage any female entrepreneurs for applying. So, and as Chetan said, is more important about your vision, like your execution, and yeah, if just continuing and being consistent, and I think you can get investment as well.
Fantastic. Thank you very much. Let's see what other questions we have. So, so what are the possibilities for an angel investor to invest in a social enterprise startup, which is focused on making social impact in the community? Chetan, do you have answers for this one?
Sorry, can you repeat the question?
So it's looking at how startups that are focused on social impact, how do they get investors through angel investing?
So there are many funds who only focus on impact investing, and and plus there are a lot of corporate programs who do funding for impact. So such startups should definitely approach these avenues, because at least they're always on the lookout of entrepreneurs in that space. Also, we've seen a lot of even angel communities who are focused on this space. So I think such entrepreneurs should build that network around approaching such funds or ventures globally, because globally I think there are so many funds that we know of who invest in such and also there are dedicated impact funds as well. So some who focus only on climate, or some who focus on food, and some on health tech. So I think the entrepreneurs should kind of do some more research and try to develop that network and get in touch with funds.
I would also like to add, there is a lot of government grants for special impact projects. United Nations work with a lot of governments across, countries where there are lower GDP less than $10,000, right? USAID and UNDP programs. I kind of participate in judging some of the UNDP projects, and from Africa and all of these countries, and really there is a lot of government grant which is equity free available to such projects. So and by the way, we FI also gets a lot of non-profit projects come into our pipeline. Really, they're coming into our pipeline to turn their non-profit business into a for-profit business. One of the recent examples I want to give you guys is a company called 30 Cents from Africa. So the objective was to feed every child in African continent at 30 cents per day. And it started as an NGO, and then it came to FI to actually structure a for-profit business model. And so I think there are various ways FI can help as well in terms of structuring from an impact perspective, also guiding you to the right funding mechanisms once you graduate of the program. And obviously we'll connect you with the global network as well. So we're spot on time. Any last questions or any tips from Victoria and Chetan? I'll leave it to you, Shamim, to conclude.
I would like one more question. This goes to Victoria. So at some point in your startup, you would have been making zero profits, right? And so what the question here is, how, as you, as a startup, still generating that investment, right? People are, you're getting investors on board to your story. So over to you.
Yeah, so I think investors, of course, they want to de-risk, and revenue profit is the easiest way to show, but then you can show in other ways. Maybe you can have like start newsletter and you have like 1,000 or something people following you. I think the most thing you can show the growth, and even if you have like 10 people, and then you can see that this growing consistently on a like daily or weekly basis. So I think that's enough.
Fantastic. And I guess from Chetan, from an investor standpoint, what is it going to take for an investor to really go on, be on board with another startup that hasn't been making money or not making profits?
Well, I think for all the entrepreneurs who are on the call, one thing I want to just say is that I think the founder has to be authentic internally, and has to showcase that in his dealings with all the investors or all the stakeholders, right? I think if you stick to your vision, if you stick to the clarity that you have about your business plan, about your idea, I'm sure sooner or later you will find the right investor for your startup. So idea is to build a relationship, really present yourself as who you really are, and kind of bring in that positivity in whatever you're doing. And I'm sure that you will be successful, and the right investor will come on board. So I want to wish everyone on this call who's starting their journey, and all the best to everyone.
Thank you very much. I think it's been an absolute pleasure to have you guys as part of the panel. Samir, would you like to offer a closing statement?
Sure. So I'd like to thank all the panelists, starting from Chetan, Basil, Victoria. Thank you very much for sharing your insights. I'm hoping that all of your insights will be helping early stage founders. Just a quick announcement: our next cohort begins on the 26th of October. So if you want to sign up, go to fi.co/apply/GCC and you can apply to our upcoming cohort. We have a fantastic pool of mentors and a lot of local support with great partners and mentors to kind of help turn your idea into a proper for-profit tech startup, right? So wishing that all of you succeed in your entrepreneurship journey and build a dream, your life's resolve, I would say. And thank you very much. Yeah.
Okay, thank you all.
Thank
Thank
you.
you. Pleasure.
Thank you.
Bye.
Thank you.
Thank you.
Bye.
Bye-bye.